Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in BYU. We love manipulative trading and a strong delisting appeal.
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Hey everyone, welcome to Laughing Stock. How are you, Dane?
Good. How are you doing?
Yeah, I'm doing good. I'm just checking out these tickers. You know, every time we need something for our intro video, and I think I found some gold today in BYU.
It's ironic you would say gold.
Yeah.
As a commodity trader, I think they're doing a pretty poor job.
They seem to be in a rough spot, right? We just went through the chart, and you saw a big spike there at some point, didn't you?
Yeah, it was like probably like a month or two back. It looks like it jumped to like, I don't know, $5 or something stupid.
Yeah.
And then within like a day, it went back down to $1. So it's one thing I've noticed with the Chinese companies, especially the ones with low market caps. You got to be really careful with those. A lot of those ones pop. Like if you're a day trader, it's probably one of the very few stocks, or probably the only way to play it, because a lot of those, they pop for a day, maybe 2 days if you're lucky. But to be honest, even to hold it through a day is kind of insane, because most of them go up within a day and come right back down. It sounds like whoever's running those companies are funding themselves nicely through your money.
Yeah, I think you're onto something there. And I asked you just before now, like the consequences of it, because this is part of why we talk about the foreign risk, right? Because a lot of these companies, we find them from other countries. Like China is a big one that we have many companies that we see is like 80-90% down in the last week and stuff like that in our screening tool. So I was just curious, like, of the consequences for these people in foreign countries, but I don't know if it gets any. It's probably hard to go after everyone, right?
Yeah, no, I'm sure it is, but I mean, I don't know how long has this actually been running public is a good question. Because like when I pull up the fundamentals for this, actually, it goes back to 2013, but in 2022, all of a sudden they have 1 million share count. Before that, it was under 1 million. And now within 2 years, they've ballooned that to 20 million.
Yeah.
So
I know there's a lot of traps out there that you need to stay away from, I think. And to be honest, though, we have touched upon this a little bit before. Like when I started out, at least. I'm not saying that I would invest in something like that, but I didn't do proper research, and I just read about hype on forums and stuff like that. So it's easy for beginners to maybe get a little bit tricked to jump into something like this. And I saw it especially during the pandemic of all these medical companies that had some kind of revolutionary testing kit or something like that, and people were jumping on it and lost all their money, I think.
Yeah, and it can happen pretty quick too. So.
Yeah. All right. How's your week been?
It's been all right. Kind of like I said on Tuesday, to be honest, I've been focusing on trying to read and just do a lot of back testing. So I find it's much easier for me to stay focused on that kind of stuff and to adjust when I'm not investing. So, or trading, whatever you want to call it. I really don't care. But like if I'm got stuff in the markets and I'm trying to set stop losses and adjust things, like I'm focused on that during the week, especially because most of the time I'm busy at work. So I have to, if I'm going to buy something, I have to buy it, make sure I put something in because I can't watch it. Like I wish I could. So once I put something in like that, I mean, granted, if it's been in the portfolio and I'm swing trading it and it's already been in for a few days, the chance of it, breaking actually through a stop loss that's like serious would be really, really low because it shouldn't drop that much. But because of that, I haven't really been buying or trading anything this week, just because I just wanted to focus on my reading and just kind of stay focused on that.
Yeah. So did you still have that one ticker or have you sold out of all?
No, I sold out of Riri.
Yeah,
it pulled back and it triggered a stop loss for me, which I didn't even see what it ended up doing for the rest of the week. It hasn't quite broken back above where I had bought anyways. So probably the right move, but who knows? I mean, tomorrow or on Monday, it could pop right back up. It doesn't look bad. It's just when I bought it was probably a little overextended at that point. That's one thing. I've taken from a lot of more successful traders is, we've talked about breakout points and base levels and these different things. And, it's one thing that like you see a pattern and everything looks great. You already like the company, the fundamentals or whatever you're focused on. Or even if you're just looking at the chart, if that's how you go. But if there's like a base and let's say the base is $1, if that stock by the time you notice it's breaking out is already at like $1.20, well, it's already 20% above where you thought the baseline was, So you take on a 20% risk at that point, because if it breaks back down through the base, which should at least be your basic stop loss, that's a 20% loss there. And now you can hedge that differently. One thing I've thought about is, for instance, normally I try and go with about, like I said, like I take like a 10 or a 15% of the portfolio position, because I usually shoot for about 10 stocks. But if it's that overextended past where I want it, maybe I'd only put like a 5% position in. So if I'm wrong and it comes back 20%, that's not that big of a hit. It's less than 1% of the portfolio. And then, for instance, let's say it starts to break out and it was at like $1.05 when I noticed it. Well, now my risk is only 5%. So maybe I would go in a full 15% on that one, because where I would actually get stop lossed out isn't that big of a loss. So, kind of hedging that way and making sure that in terms of, even if it looks good and if it starts to get overextended, making sure that you don't go in just because your fear of missing out. It's okay. You're going to miss out on things. You're not going to buy at the right times. It's impossible to time these all perfectly, but just once again, playing a strong defense, I feel is becoming more and more my mentality in terms of, when one works out, it's going to work out. And because it's a swing trade, it's going to work out very well. You're going to kill it over the course of a few days to a few weeks. But, as you make mistakes and you go in things that pull back, just making sure that you're limiting that downside is the most important thing, whether that's through position sizing and or where you get stopped out. Um, and we've talked about this too, but every time I get stopped out of something, if my stop loss is like 0.5% of my overall portfolio, well, I can get stop lossed out like 10, 15 times, and all I need is one stock to go up 50% or something like that, and it will essentially erase that and then start to profit. So um, you're going to be wrong, and it's a lot more comfortable to know that even if you miss something and it goes up afterwards, at least I didn't lose a lot of money on the trade, no matter
Yeah.
how I played it.
I think the more I think about this, that's a bigger and bigger point for me. Like, because it's so easy to just glance over or skip through the ones that saved you, like the stop losses that saved you, and because a lot of them going to save you, but because you use them so frequently, you're going to miss on some as well. That you're going to be stopped out of a position that's going to probably double or something very quickly after, and that has to be okay. You have to live with that in this territory,
Right. No,
Yeah.
I completely agree.
And that's okay. And like we have said before, like there's other opportunities, and that's one philosophy behind this, right? Because when you do it like this, you get to go through more opportunities in the same period of time than what we have done so far. It's a bit more short-term thinking.
Yeah, correct.
Yeah.
Yeah, and the other thing too is, I've done quite a bit of back testing, and I still think it kind of holds true. I don't get me wrong. There's plenty of examples of where something seems to pop and the fundamentals don't necessarily agree, because a lot of times it can be narrative. But I do find even if you just put some basic things in terms of your screening, you tend to be that much more successful in terms of swing trading. So, for instance, like obvious things that you like are like positive revenue, positive earnings per share, or at least that it's moving in the right direction. Those kind of things. Those are all things that matter. And like, you don't even have to set it all that high, but if you're just trying to, you think about it, you're trying to screen down to just so many stocks that you can focus on. Cause sure, you could look at, a few thousand charts at, each week if you wanted, but that's a lot of time. And, it just seems like a lot of unnecessary work when most of those charts, even if one happens to go off, does that mean you're even going to catch it anyways? Like it's tough to find them all anyways.
Yeah.
And to be honest, if something moves on one day, let's say something is up 10% randomly on some day, that's already a sign for me to look at that one more specifically anyways. So one of the things I'm working on is coming up with some screeners that basically focus down to like, let's say like 50 stocks that look interesting to me in general. And, and I'm setting my EPS, year over year, or quarter over quarter, pretty high, 15, 20% at least. And I think that helps to really screen down to just the stocks that are really performing well. And then when you pull up the chart, you can see it that they're just in general uptrends. Like almost all of these stocks are in strong uptrends. And then you're just waiting for that next signal that it's taking that next move up. And it helps you to be a little bit more confident too, because a lot of these stocks start to trend towards highs. Now, as a value investor, that's usually a sign not to buy. But
Yeah.
the one time that it makes sense is if it's growing into the future, you have to adjust your metrics to assume that growth. So I guess it makes me slightly more interested in growth investing as well, which typically was a spot I didn't play so much in. But it kind of, between the chart and then looking at the fundamentals and how they're improving, it allows me to at least appreciate some growth. And then the chart is kind of my margin of safety. So it gives me the stop loss, as well as when something starts to climb too high, if I've been in it for too long, it'll give me some signals to get out. So I actually am able to capture that gain without, riding it up for too long. And then all of a sudden the whole thing crashes down and you lose everything before you were able to capture any of it.
Do you feel like now turning over to this strategy here that you are in the process now to create more rules that you're not going to shy away from? Because we have had some rules up until now, but they are a bit more floating. Like it's nothing is like, you know, never break this rule and blah blah blah. But it seems to me like there's a little bit maybe of more importance to be a bit more disciplined and follow some clear rules with this swing trading method. What do you think?
And to be honest, the thing that's interesting to me, and you know, we touched on this a little bit yesterday when we were talking, but I find that whether you're a value investor, whether you're a growth investor, whether you're just a technical analyst, they all have rules and essentially a discipline in the way that they do things, and that seems to be the most important thing for success. You know, great value investors, whether you're looking in deep value or you're looking at, you know, just the top companies, what you're looking for is you know, businesses that are doing well in regardless of what that is. And even like a deep value thing, like you're looking for that business to improve. You're taking the risk on essentially of getting in early before they've actually proven it, but they have to have that narrative. Like even if we go back to RK's argument with GameStop, and you can argue that it didn't work out, but he at least was in there when the narrative had changed that they could become something better. And then he uses different sets to make a margin of safety. Now you take that in comparison to a growth investor, and the growth investor is looking at, okay, well, I'm predicting that this is going to grow at this massive rate, so I'm okay with getting in here. And then they're going to use their own forms of margin of safety. Now, it's not a typical margin of safety that a value investor would appreciate, because they're looking at you know, metrics and whatnot in a certain point where they would get out based on the fundamentals breaking down, where a growth investor is going to stay in until all of a sudden the growth numbers stop adding up. That's their margin of safety. So no matter what you know, whether you, or even if you're a chartist, you set a margin of safety by setting a stop loss at a certain point. And that's based on, you know, base levels on the chart and different things that you've seen and following the volume of it. But all of them are doing something to make sure that they have this area that forces them to get out. And even long-term investors, their margin of safety sometimes is the fact that, you know, like they're able to comfortably sit in a stock that goes down 50% because they're holding it for the long term.
Yeah.
Now, all of these people can be wrong in different ways, but it doesn't matter. What they've done is they've created a system where regardless of what your length of time is, you have something that's going to basically clarify to you that you need to get out. Now, whether that's a number or that's a change in the business, it doesn't matter, but you're still setting something that tells you, you know, this business has changed, or this broke through a number that I didn't think it would break through. That's your signal to get out. And then same thing, if the business continues to perform well, the chart continues to look good, it doesn't matter. It's all the same thing. It's a way to basically ride your winners up and cut your losses short, and or set something in place that if the business doesn't work out the way you want, that's when you cut your losses. And you know, on a longer time frame, you probably can have more volatility. You know, you kind of have to accept that. Like if you buy a long-term company and you plan on holding that for 10 years, well, it could go down 50%, but who cares, because I care about what it's going to do in 10 years. You know what I mean? So, you know, where a trader, since their time frames are usually much shorter, you know, a few days to weeks, or I mean, even a day trader's hours or minutes, you know, it doesn't matter. They have to set their stop losses even tighter. Like if you're scalping, your stop losses are probably like 2% and your sells are probably at like 5%, you know, because you're just trying to slowly outrun your losses. And I'm sure there's other ways to do it, or you're looking for moving averages that cross, whatever, blah, blah, blah. It doesn't matter. But you get my point that, like I said, it doesn't really matter how you do it. You just have to have a system that understands where you're going to get out, and some kind of rules on how high you can ride something. And like I said, whether that's a signal from a chart or you're following the business and you change in the business, I just think it's ironic because all of them kind of attack each other for how they do it, but essentially they're all kind of just doing the same thing in different ways.
I saw in a group that I'm in comments about technical analysis yesterday. It's funny you say there's like, oh no, that's just bullshit. that has nothing to do with investing, and they completely discounted it. And these are good investors. I know. I like one of them are proper rich, you know. Yeah, just completely discounting. I will say one thing though, that I think we have said it before, but in terms of rules and stuff, if you go and watch the stream since we started, you can see around one particular ticker, BNED, where we broke the rule that we had by ignoring the stop loss, and you can see how that went for us, you know. So like you are saying, like different styles, different things that you look for, and to limit your downside and all that stuff. And if you go back and look at the streams, there's a clear example of where we on purpose kind of broke the rule, and it burnt us.
Yes. And I think, you know, in hindsight too, after seeing some of these losses stack up, after having some great success, that's where I kind of got like, okay, you need to really start to accept that there has to be some form of risk management going on here.
Yeah.
And if you just stick to those rules, you'll be okay, but you have to stick to those rules. You cannot break them. You know, it sucks because you can watch yourself, you know, get hit a few times, but you have to remember that investing or trading, there's going to be misses. It doesn't matter. Even if you're right, you're going to be wrong. You know, I heard someone talk about it yesterday, and, you know, there's four kind of, they labeled it like this. There's four kind of things you can do. You can make a bad bet, a good trade, or a bad trade. And a bad trade is different than a bad bet, because a bad bet meant that the trade wasn't going to work no matter what. And you can have good trades that are bad bets, you know, and same thing, you can have a good bet that turned out as a bad trade, but they're different things, because a good bet was, you know, your downside you thought was 5% and your upside was 150. Well, you know, it might be a bad trade. You got stop lossed out at the 5% loss, but maybe it goes up later on and you were technically right. You just followed your rules to make sure that the bet was at least in your favor, because you always have to just make sure that whatever your risk is, you should be risking less on the downside as compared to whatever the upside is. That's the only way that the numbers will work. And you hear about all these people who have built these computer algorithms and stuff to outperform the market. And all of those have to be some form of what we're talking about, where whatever the computer decides to make a buy, it's doing it in the idea that whatever it's going to lose is less than what it's going to make.
Yeah. There was a guy here where I live that a great investor, but then he messed up one trade. He went all in on some. He was dealing with electricity prices and stuff like that, and he was putting all he had. I don't know what happened, but because that was stupid, and he lost. But he was right. But it took a bit longer than he anticipated. And he kind of crushed the entire market here in Europe in that sector, and there was a big deal. Like he needed to work closely to get some of the money back and stuff like that. And of course now he has a good job and he's starting again and everything. But other smart investors around him saw that what he was doing was like, oh yeah, that makes sense, but they did it a bit later and they, you know, doubled their money.
Yeah. And you know, I mean, that's the thing is, like I said, your timing can be off. There's so many little things that can go wrong, but that's why it's important to just keep trying, you know, like no matter what. I think that's another thing that I've been learning is like, investing can be extremely discouraging, you know, and most people end up blowing up their accounts. So, you know, you run out of money, you can't invest. It's that simple.
Yeah.
So, you know, that's another, you know, you hear it, and it's funny too, because most traders, they have it, and Buffett says the same thing. And, you know, Buffett's rule one is don't lose money. And most traders will say, you know, their rule one essentially is, you know, you can make a series of bad trades, but when you don't have any money, you can't make any trades. So, you know, the idea is no matter what, though, you just have to be careful with your downside. Like, you know, no matter what, I feel like investing is all about your downside protection. The upside, as always, whether you're investing or trading, will work its way out.
Yeah.
But
All right, you
and
wanna?
yeah, I mean, overall too, nothing had changed since Tuesday when I streamed. So the portfolio right now, what was I up? About 14.73% right now. So nothing's changed essentially because I had gotten out and I hadn't really bought. I almost bought something and then decided not to. So
Yeah.
I just ended up watching it, which it was more of a quick trade, which it would have worked out. But, you know, I'm just, like I said, I'm doing testing and stuff like that. So it could have
Taking it
just
slow.
really not worked.
Yeah. We can jump into the dashboard here. Did you have you seen like all the stuff going on with the Tesla right now with the robots and the taxi and all that stuff? There's some
Yeah,
really cool
I have.
videos, but I see the share price took a hit.
Yeah, I think it's because even though they showed a lot of it, it was all kind of like it didn't really show much. Like, yeah, they showed that these are things, but it nothing was like really like proof of concept or that it was going to be successful or so. You know, I don't know.
Yeah, I also saw a guy that said like he was not impressed with that taxi.
Yeah, I mean it's tough to be. You know, you never know how these things are going to go.
Yeah. But cool robots, you know, we are not the biggest fan of those robot things, so I'm getting a bit scared when I see all those robots.
Never trust them.
Yeah. Did you see anything here like normal moves, right? We were talking before the stream that we have seen some banks and insurance and stuff like that in the screening in the daily movers this week.
Yeah, I have both banks and regional banks up right now.
Yeah.
Bitcoin looks like it was up a decent amount. I saw MicroStrategy popped, which I know they're pretty linked to Bitcoin. Which I mean, Bitcoin was up. I got 4.5%, so not great or bad. And I just pulled up the Bitcoin chart here, and it looks like it's consolidating a little bit, as in like there could be a potential move up or down. I'm not convinced of one way or the other, but it's kind of just been in the same little area now for a few months where it goes from like mid 50,000 to I don't know, mid 60s or maybe almost 70, and I would say it's a little bit of a downtrend, but nothing that really stands out to me. And I still have never really traded Bitcoin, but
yeah. No, I think it's something I watch. It's hard. But I like to see the discussions and stuff about Bitcoin and cryptocurrency and stuff like that. But I'm not involved.
And Bitcoin
Yeah.
to me, I mean, I feel like that's true technical analysis just because it's really, I mean, don't get me wrong. Every once in a while, there's news or something that comes out of it about Bitcoin, but like, you know, it's super rare that that's going to have a huge effect on it. You know, I find with this, you probably could just use the chart to determine when buys and sells are. And I'm looking at the chart now over the past 6 months, and it looks like you could trade on this. You know, I would pay attention to the same things I would with anything else, like volume, moving averages, blah blah blah.
Yeah. If you zoom out properly, though, can you? It looks like a big cup and handle a bit, you know, from 2022 to now.
Yeah, it does. It does look like a bit of a handle here. I'm looking at the monthly right now. So, you know, if it broke out from here, could it go up again? It could, but like
That would be brand new territory.
yeah, it would be brand new territory, and I just wonder how much money can go into something, because one thing that's also really important that most analysts will talk about, and I haven't really touched on this with a cup and handle, is you tend to see a cup and handle work for a lot of these like companies and things, and they tend to happen in usually around 3. Sometimes it happens a 4th time, but usually around there is where you start to reach what's considered like the climax of the entire move. And from that point on, usually there's quite a big downtrend before you'll see the next rise back up. So the other thing too is a lot of times this is where it's kind of overextended. They talk about this with markets as well, as the most important thing to watch is actually volume, because you really want to see if it's a distribution period or not. Are people actually selling out more so than buying in? And, institutions are going to be the big ones that move Bitcoin. This is, a Bitcoin $60-some thousand. Like, it's not like a retail investor is moving that. So if you start to see the price slowly trail down and volume goes down, that would be bullish essentially. Because you would assume that if volume's going down and the price isn't really moving much, that means there's not really anybody selling, and if the price was to go up on very quick volume, that would mean it finally breaks out. Opposite thing is if you saw pretty heavy volume and the price slowly starting to move down, that actually means that people are slowly selling their positions there. And most likely there'll be a breakdown to the bear side. That would be a good spot to probably short. Not that I'm shorting, and once again, this is not investing advice. Do your own due diligence and talk to your financial advisor.
Yeah.
But that's just what I get from the chart here. In the other interesting thing here too is on the daily, it is below the 200-day moving average. A bearish sign, obviously, but it's close to it anyways, like really close to it. It's actually almost trading right at it. So you could see a move here. A lot of times when you see all the moving averages converge into one spot, that's usually where you can see something eventually break out. Now that can take a long time. It can trade around that moving average for, months even. So it doesn't mean it's going to happen anytime soon, but it means that the market now is kind of unsure where to go. It's not really sure if it's going to go up or down from here. No one yet has made that call in the long run.
And I guess you can also speculate that the election will be some kind of trigger for a move in any direction.
Yeah, it definitely could be. And I would say, actually now I'm looking at this daily chart, and there was the move upwards, and anytime I see a move upwards, it looks very weak on volume here on the daily chart. It looks much stronger volume wise on the downside. So I would imagine that this is going to slowly pull back, and probably at some point I could picture this one breaking. Actually, this to me, and like I said, I'm still new to technicals and using charts, but to me right now, just looking at this would signal to me that it looks like it's going to break to the downside.
Yeah. Okay. Yeah.
But I don't know. It like you said, it is a really massive cup and handle from 2021.
Yeah, that is a big one.
So, but even if you look at the monthly chart part for 2021, it hit about where it is now and dropped back down to about 30 something, and then hit again, and that's where you would have expected it to break out again, and that's where it totally failed for a long time. All the way down to the bottom there in 2020, right when 2023 started.
Yeah.
Man, that was crazy. It got all the way down to $20,000.
Yeah. I just checked that. I think when I started before I started investing in stocks, I think I bought some Bitcoin, or I know I bought some Bitcoin, but it was just to check how things works. And I think I bought it exactly here at the top here, and then you can say if I hold it, it would be nice, But literally the day after, I lost a lot of money, and I think I sold out. So I have never touched it since.
Yeah. So whatever. It's not that big of a deal. But
no.
No, and
It
honestly,
just
I've never gotten to Bitcoin because I've never opened like a wallet or something like that. And
yeah. And
and for
I
the
have to
longest
say
time, sorry.
that was really annoying because I also bought some Ethereum and I just let that go, and that actually worked out well. And when I tried to withdraw the money from Coinbase, it was a pain.
Yeah.
It was so hard. I had to argue with them for a month or so to get my money out because they asked me for all kinds of verification and stuff like that. But to get the money in was no problem, you know.
Oh, of course not.
Yeah, so that was just a bad maybe it's just for me, I don't know what happened, but that was for me a bad experience to deal with that shit, and I didn't feel that was a good system at all.
Um.
All right.
Yeah, that's enough talk about Bitcoin. You want to get to some real companies here?
Yeah, enough with the dashboard. The dashboard takes us places, you know.
It does. It does.
We need to
no,
focus.
That's why I that one stream I was late on. I was like, I got to get this updated because I do like looking at it.
Yeah.
You know, like I said, I think at this point, just because I'm looking at stuff that's moving, I usually can kind of tell where to look. You know, like we said, I knew banking was moving just because I had seen so many banks. I didn't realize the whole sector was up 3%.
Yeah.
But you know, it whether you see it through the dashboard or through stocks, it doesn't matter. But it's still interesting.
Yeah. Hey Dane, I haven't seen, but Value has used the chat here. He's saying, "Hi guys, late here. Hope your week has both gone well." And then he's saying, "Hey Redneck, I was told in Norway they call speed bumps farts humpers. What's the story with that?" And he's not wrong. He's not wrong. But and there, I'm not gonna tell. There's a joke about it, but it means speed in Norwegian. Fart. So.
That's
And
pretty funny.
okay, I will tell a story then. I'm not sure if it's real or not, but we have, you know, in Scandinavia, rallycross, you know, WRC or whatever it's called. It's very popular, and we had one in Norway that he speaks very bad English, even worse than me. And he said, like, it's not the fart that kills you, it's the smell. And in Norwegian, that's like, it's not the speed that kills you, it's the crash, you know.
Oh, that's funny.
But it works out. So yeah, Value, you are actually correct. That's how it is. All right. And by the way, I have to say, in the Discord channel, we have a quiz, and I need to post a new quiz for October soon. But Value got it right, Dane. He got the answer right.
I saw that you posted something, but I actually haven't even looked at it to actually see what it was.
He said East Timor, which was close enough. We will accept that one as a correct answer. So good work. There's coming a new quiz soon. All right, I'm in AEHR. That's the one I pulled up first here, Dane.
Yeah, me as well. So we've looked at them before. It's been a minute since I have. How about you?
I don't think I have, and I'm seeing that some of my I think Y sheets doesn't have a lot of the metrics and stuff here. So
last time I looked
maybe
at these guys was in 2022.
Okay. But
So
can you just read the business description maybe?
Yeah, they offer test solutions for testing, burning in, and stabilizing semiconductor devices in the wafer level, singulated die, and package part form. Its products include the Fox P family of test and burn-in systems. And there's a bunch of different names, but they basically test the wafers and the singulated die modules. They look for burn-in, stabilizing of the range of devices such as silicon carbide-based and other power semiconductors, 2D and 3D sensors used in phones, tablets, other computing devices. It has a system that tests solutions for logic, memory, and photonic devices. There's a bunch of different things, but basically all it's doing is it's you know, when a company creates the wafer for semiconductors, they can send that wafer into AEHR tests, and they'll basically test it, make sure it's stable, make sure that the product coming out is what they're expecting. And yeah, so it's, you know, they're basically kind of like the quality analysis for semiconductors.
Yeah. And I see they had a big move. They had a 20% move.
Yeah, and the day before they were up. Actually, the past 2 days they've kind of bounced up. So I think I was really more just looking at what's going on here. Now, I will say the fundamental picture for these guys has really improved. I mean, the you know, if you look at the numbers, they look great.
Yeah. And no debt.
Yeah, clean balance sheet. Generating cash. I mean, just this year they generated 33 million in or in the past trailing 12 months.
Yeah. So the spike is a quarterly filing, right?
Yeah, I actually didn't see, so I figured that's probably what it is. Sorry, I'm trying to get my camera back up here, guys. Don't mind me.
Yeah. Yeah, I think it's
There it goes.
and I think they reaffirmed the guidance, future guidance.
Yeah, it looks like Henrik actually just posted on this with pretty terrible timing, saying to hold because it's taken off.
Who posted, did you say?
Henrik, Alex.
Oh, Henrik Alex, yeah. Yeah, I saw some on Thursday that he was also writing a lot of articles on, and that was a big miss as well. And it's just it's not to slam anyone, but it's you see. This is why it's important to track analysts as well on even on Seeking Alpha. We have a list, both of us, right? That the people we follow and things can change there too.
Well, and Henrik's been following this for a while. I know I've seen him look at it, and don't get me wrong. I mean, in 2023, this was trading at $50. So, I mean, it had a really good 2023, and this year's been a little bit of more of a pullback. It hasn't been quite as good. You know, like I said, growth starts to get priced in, and, you know, revenues from 2022 to 2023 went from 51 million to 65 million, where this year it only hit 66 million. So you see these things get priced in where the growth is just like insane. And then all of a sudden, you know, the growth slows right down, and then everybody prices it right back down to more the price of the assets and the cash flow. You know, because a lot of, you know, it's essentially speculating when you're looking at growth.
Yeah.
So
additional point here that I saw is there's a 19% short interest.
yeah, and you know, I don't know when that's from. It did get up into the $20 range recently, so that could have been just people thinking this was overdone. You know, the whole move was overdone.
Yeah. In July.
Yeah. Or, I mean, that could be also someone shorting it from back, you know, start of the year, or even back into last year.
Yeah, this short information is from end of September.
And Henrik's saying, this is from them. It says, despite the better than expected quarter and very positive market commentary, management only reiterated the company's previous 4-year 2025 guidance for revenues of at least 70 million and net profit before taxes of at least 10% of revenues. In addition, they abstained from providing its effective backlog number, which includes all orders received since quarter end. After being asked by an analyst on the conference call, management stated that they'd be able to discuss Sonoma multi-system sale was the only meaningful order received so far. Providing the effective backlog number would have been would have allowed for extrapolating the Sonoma system pricing, which maybe that's why they didn't actually want to give it. But given this issue, they'd be well served to secure additional orders in the current quarter, as otherwise the company would also have to go dark on their quarter end backlog number. So he's saying just because they don't want to necessarily give away their pricing, due to the competitors and stuff like that, the numbers that investors want to see, they can't hand out essentially. So it kind of sucks for the stock because, as an investor, you're like, well, what's your backlog? How you doing? And they're like, we don't really want to say, because as of now, we only have the one big order. So you could quickly figure out how much these things cost. So I think at this point, why he's saying, and he reiterates a hold rating, he's just saying it's kind of tough here. There's not much news. So, which makes sense. I think that's a fair assessment at this point.
Yeah.
But otherwise, I mean, don't get me wrong, the company's definitely improved. I mean, it went from just steadily declining to now it's gaining book value. It's still completing orders. It's generating revenues. And like you said, no debt.
Yeah, I was going to say that again. Like, I like that with this company, and I think we talked about it last weekend, right? Where I don't remember the ticker now, but all of a sudden you just saw a bounce, and it wasn't that the numbers were so great. It was more like they just confirmed to the market that you can trust the management, right? That they are on the right track.
Yeah, I would agree.
And now they are these people are also like, yeah, we have some solid numbers now, and we are just maintaining the future guidance as we said before, and we have no debt. So all of that points to a management team that maybe knows what they are doing, right?
Yeah, I would agree. Actually, that's one of the things I just changed in my database, is just saying that I feel like management seems good here.
Yeah. And then, of course, we can start to talk about what the upside can be here. But
well, one thing, it looks like they're sitting on cash now, and it looks like they're generating pretty substantial cash. I mean, they got 48 million, and they don't really have a lot of liabilities. So they could do different things. I mean, they have slowly bumped the share count over the past few years. So they maybe can either slow that down and use the cash in place. So all of a sudden it would be nice to see the share count stagnate and or even buy back some shares. I will say if the prices come down here, maybe this is now finally the first time they could buy. But I will say back in April and May of this year, it was down to $10. That would have been a great place to buy some shares back.
Yeah, exactly. Because there has actually been some dilution in this company.
Right. That's what I'm saying, is there's been some slight. There was an insider purchase. Do you have that?
No, I don't have that data here. But
Howard Slayan, he spent about $300,000 at about $15 he bought.
Yeah.
There was another one. The EVP, he also bought about $100,000, but he bought it about $20.
Yeah.
And then it looks like that people have been selling, but most of the selling was done quite a bit back in the $50 range.
Yeah. Which is Howard Slayan is buying in at 15 again, and he sold at 52. So
right.
Good job.
And that's what I'm saying too. I feel like, in terms of a business, it looks like they have some room to run.
Yeah.
Anything else you want to touch on this one? I'm seeing if there's any owners.
I see there has been some acquisitions. If I just need to check more into I don't think I will add it to my tracking, but that's because I don't have all the numbers. It just gets messy for me.
Gotcha.
But I do like everything that we have said, and I also saw in my sheet at least that the last 3 years have been positive earnings as well. So and growing. So I think they are on a good path here.
Yeah, just looking at institutional ownership, it looks like it's definitely an inflow. Like more people are buying this last quarter. A lot of people were buying compared to selling. There was a few people who were selling still, but
Yeah.
most of them were buying pretty heavily actually.
Okay.
So maybe you can see some volume here. I mean, this last week was one of its biggest volume movers. Even going all the way back to like 2022.
Yeah. And it's almost identical to, 8th of July there, where you had the two big volume spikes.
Right.
And that's also connected to our earnings.
What did this do in after hours? Was it still up?
No, they were flat.
It just kind of hung there.
Yeah. Which is good after a 20% up, I think.
Yeah, being down by point, I mean, that's nothing.
Yeah.
That means anybody who bought held it. Which, not to say that can't change on Monday, but I mean, as of now, whatever.
Yeah.
All right. You want to go to the next one?
Yeah, we can go to the next one. I like that one though.
Yeah, no, they seem good.
Yeah. Oh, what the hell? Nothing works in my sheet today. Hold on. Let me try to see here.
It's just one of those days.
Yeah.
Yeah, next I have AFRM Holdings.
Yeah. Now I have it. Here we go. So bigger company.
Yeah, definitely on the bigger side.
Straight away, I'm not loving these fundamentals, but
it's burning cash pretty steadily here.
Yeah.
The one thing I will say is in terms of how much it was burning, it's improving. It's gotten better, but
Yeah.
and revenues this year really have been up.
Yeah, revenues are, yeah, the margins are looking improved, like you said, and costs are also down a bit.
I will say though, there's a lot of debt on this.
Yeah, I saw the debt is climbing up year by year here.
But they must have had somewhat of a turnaround here, because just in August this was trading at $20.
Yeah. 6% insider ownership.
There's a recent news article saying a firm upgraded as well as at Wells Fargo on e-com checkout share palatable valuation case. What the hell does that mean? The availability of AFRM financing through Apple Pay has increased its potential exposure to their products' generally younger and higher income demographics. Its use of 0% offers should increase engagement with merchants and manufacturers, and lower interest rates should lead to more promotional rates, according to who's MS? Oh, Morgan Stanley. Wells Fargo sees growth catalysts over the next year in Apple Pay partnership, an easing rate cycle benefiting growth capacity and lower funding costs, as well as introducing them into new markets. Wells raised its recommendation on the stock to equal weight and increase their price target to 52 from 40.
Yeah, I mean that's stuff like that drives the price, of course, but I think this is this needs a little bit more digging for me at least.
Yeah, I mean, I don't know quite how high it can go here. It does. It's a pretty big handle, but it does look like a cup and handle right here that has broken through. Um, Although I would argue that it actually touched the top of this handle and didn't break through this. I don't know if you have the chart up. Sorry, because like
Yeah,
I
I
said, I
have.
can't see the screen, but it looks like on like September like 18th, it touched $47, and yesterday it touched the same, and then it ended up going back down, or like 48 back down to 47 ish.
Yeah, you're talking about here. Yeah.
Which like I said, MACD's started to turn around. Volume looks pretty strong. Looks like about 20 million shares sold.
Yeah.
Um, I just wonder how much room this has to still climb. But like you said too, I mean, this is a big company with institutional ownership, so it could be that you could watch this share price push past 52.
So this breakout now, in terms of the cup and handle you were talking about, that last candle, is that like considered that it broke the beginning of the cup or what?
Yeah.
Like this one, if you can see the, oh, you can't see, of course.
Yeah, hang on. Let me pull up YouTube real quick just so I can.
You're talking about this, right? If you can see.
Is this a daily chart?
Yeah.
Yeah. So see the top of that peak red candle there?
Yeah, here.
See how that had gotten it ended the day lower, but it had creeped up to about 48.
Yeah.
That line right there that's going across, that would be its breakout point for me.
Yeah, so it barely broke it then.
That's what I'm saying. It tapped it and then ended the day below it. Now, don't get me wrong, it's on pretty heavy volume. So on Monday, if it breaks through that, that would be considered bullish.
Yeah.
But
But
like I said,
it
also is like, how much of a gain are you going to get out of this? Are you shooting for like a 5 or 10% return? Because the idea is you'd want it to push higher. Now, if you swing trade it and it ends up continuing up, it'll work out.
Yeah. So that candle here now, the recent one, for it to be considered to breaking above the other one, it needs to close above it, or just go there during the day.
You would want it to end the day above it.
Yeah. Okay.
I mean, but that's the thing is, so if you were going to buy this, like at least my strategy or how I would try and play it is, if I saw it break through it, I would probably put a purchase in there and then use like either the start of the day or some kind of stop loss at a certain percentage. Most people argue you shouldn't go much more over 5 to 7%. Some people will push it to 10. And then on the more extreme side, some people push it to 15. But in my opinion, if this broke through and then broke right back down, that would be bearish to me. It'd show that there's not enough volume. But like I said, there was more volume on Friday, and we're in a general little uptrend there.
Yeah. Yeah.
And I mean, it looks almost more like a double bottom than it does an actual cup and handle from that first rise up here.
Yeah. All right. So the chart looks good, but and the story and the upgrades are good, of course. But if you go back to fundamentals, like it would need a little bit more time to prove that it will raise up a bit, right?
Right.
And I don't like the depth here. Like it's going up a considerable amount every year, right?
Yeah, I would agree there. And one thing to notice about the company too is it does have a high level of debt. Now, don't get me wrong, the narrative here has slightly changed in the idea that it's and it does have a lot of cash, so it's not like the debt's like an immediate concern. I'm just saying it has more debt. It runs quite leveraged. But I would want to see some really solid numbers here. And like earnings per share aren't quite positive now. Cash flow, and simple free cash flow has become positive, so that's obviously huge.
Yeah.
But and don't get me wrong, earnings per share for me went from like minus $3 to like a $1.50 ish.
Yeah,
Mine
I
says
roughly the
$1.60,
same.
but whatever, it doesn't matter. But my point being is that numbers got cut in half. So while it's not positive yet, it is a huge move in the right direction for them.
Yeah,
So
and revenue is margins are
revenue, like you
improving and
said.
revenue is up. So
Yeah, revenue looks great. So
Yeah.
those are all, I mean, kind of obvious symbols you should be looking for in these things. So it's interesting because that's why I said this could break higher past 52, because the idea would be here is that growth investors start looking at this and they're going to say, hey, you know what, if this continues in the right direction within a few years, this could be worth $100. So even though the analyst right now and everyone's kind of saying $50 makes sense at the moment, it could go much higher than that. And that's
Yeah.
kind of why you just have to follow. And that's why the market will tell you. That's one thing I like about the charts is I don't know. I don't know if it's worth 50 at this point. I don't know how you would know that. I don't know how you make that judgment call. A lot of people would probably say you don't touch this. But for me, if the chart screams to buy it and everyone starts filing in, you got the volume, it will go up. I mean, it's going to go up. It can't not.
No, and in those cases, like you were saying, it's perhaps even better that it is a bit of a bigger size company, because you get all that institutional money in, and they're gonna stay there for a little bit at least.
Right.
Yeah.
And yeah, no, I mean that's why it's so important, in my opinion, to look at institutions, because they're the ones who really move markets. I mean, when you have, $100 million that you're trying to place somewhere, this is a company that's big enough to put $100 million into and make a good return on it, or even more than that for that matter. So just, kind of the way the way I'm looking at it right now.
Yeah, good. You want to go to the next, or?
Yeah, we can keep going. What was I just trying? I was just trying to finish up something with this, but yeah, you can go on to the next one.
I'm just following the order you had them in, so I think it's the same order.
Yeah, I got AGBA.
Yeah. Hong Kong based.
Which I have not looked at them before. Have you ever?
No. And you know me and my numbers, when it's a foreign company, I immediately struggle a bit. But we can check the chart though.
Oh, hold on. That's what I was looking at real quick, was just to see. All right, AGBA here. It's formerly AGBA Acquisition Limited. Companies engaged in provision of full-service wealth management and fintech platforms. Operates its business through 4 segments. The financial products include life insurance, pensions, property casualty insurance, stock brokerage, others. It also has a money lending business. The fintech section is engaged in management of fintech investments. And then the distribution business segment is engaged in the provision of insurance brokerage services. Oh, and then they also have a healthcare business segment engaged in the management of healthcare investments.
Yeah.
So obviously financial. The one thing I'll say, looking at this one, is the chart is interesting here because it had a huge jump up where it looks like it survived what looks like bankruptcy.
You mean in October, beginning of October?
I have April.
April.
But let me zoom back. Well, it got down there in October. Yes, it began the drop down there. But I'm saying in April, it finally exploded from, what is this, like 10 cents to almost $2.
I see what you mean. You mean the first one?
Hang on, let me see what you're looking at. Yes, that move, that move there. But that now since then has traded sideways. So this one to me, I'm more interested to see because it does look like this is a very big cup and handle from 2023 till April of 2024, and now we're in that pullback period. And it looks like it's starting to move up and down now, which is why I'm more interested here. Like it kind of traded sideways till like the 23rd of September, and then it bounced up to $1.50, and now it's back down to around $1. So I'm curious if this one could do anything here. It's very consolidated. I mean, if you look at the price, it doesn't move up and down all that much lately. But what's going on with this one here?
I'm just trying to read a bit because I struggle a bit to like because this is in my description it says like they do not have a significant operation. It tends to affect a merger, share exchange, asset acquisition, stock purchase, reorganization, or similar business combination with one or more businesses in the healthcare, education, entertainment, and financial service sectors in China. And then they are talking about something that is going to take off on TikTok.
Oh, okay. I didn't realize it was Chinese.
Yeah.
Yeah, let me pull up Seeking to see what everyone's actually saying.
Oh, hold on. I think I read this a bit wrong with the TikTok thing, but is it like a platform or thriller?
Thrillers. It's an app.
Yeah, so probably like a platform, social media thing.
Yeah, it says Triller is a platform primarily known in the music and entertainment industry, reaching the top spot in app stores across 79 countries. In 2020, Triller even surpassed its primary competitor, TikTok, in the U.S. App Store. Wow, I've not heard of Triller. I am definitely getting old.
Yeah.
I have to go to my App Store right now, even just to look at what it is.
Yeah.
Not that. Yeah, I don't know. Is anybody in the chat here? Anybody know what Triller is? Help us older gentlemen figure this out.
Yeah, so this AGBA began trading as a Nasdaq-listed SPAC through British Virgin Island Incorporation. It merged with Tug Holdings, which I saw were big owners there, in a business combination agreement to go public. AGBA is a one-stop financial supermarket positioned to capture the attractive long-term demographic in Hong Kong and mainland China. However, despite its market leadership, the shares garnered little attention and languished on the $1 per share. And then this thriller thing happened.
Agra's pre-announcement of 40 cents per share will issue equity value to 119 million. So this is an interesting one because of this merger. I mean, this basically makes me think if this one breaks out, they're arguing that it should be worth Triller is estimated to be valued at 665 million.
What is thriller? I need to search here.
Yeah, I was pulling it up and then I started reading here. Triller. Social video platform. I feel like it's like a TikTok.
Yeah, I think it is, but it's more like they integrate music, because I was reading and they have a lot of celebrities endorsing it. So it's like a mix probably between TikTok and Spotify, something like that.
Yeah, it looks like you can record and edit on it. Like it looks like it's like a way to make like more advanced videos on like where TikTok, it's you setting it up and then you just kind of recording yourself. This allows, it looks more like you're allowed to like edit and really make like a music video almost with it.
Yeah.
Interesting.
Just checking like how much engagement these posts are getting. It's like these are probably like the top rated ones.
It's definitely a popular app.
Yeah. All right. I'm not sure if I'm gonna download it though.
I don't need to download. I was more just curious to see what it is because I had not heard of it. But like I said, I am definitely behind the times here.
Yeah.
I got to stop putting these in alphabetical order because I feel like every stream now you and I get through like the A's.
Yeah.
In this article, it says its most valid competitor is TikTok, which is also not publicly traded. It's owned by the Chinese company ByteDance. In addition, we would argue that Triller competes with Meta-owned Instagram Reels, Snapchat, even YouTube for that matter. These three publicly traded companies have a combined market cap of approaching 3.5 trillion. So Triller's competitors are clearly well-funded. But Triller differentiates itself from competitors by operating as an open garden. This essentially means that Triller is not the sole seller of advertising within or around the social content. Triller content creators can distribute their content across any platform, building lasting and durable customer relationships and monetization through their own opportunities. Triller generates revenue in this area through revenue sharing agreements and service fees. On the revenue sharing front, Triller earns a percentage of its advertising fees, premium content, events, pay-per-view fees, subscription sales, and merchandising sales. In terms of service fees, Triller earns revenue from brand and campaign fees, transaction fees, monthly subscription, and SaaS fees. The legal climate surrounding TikTok could be a game changer. It appears that Congress is looking to force TikTok's Chinese parent company to sell its stake or face being banned. So that obviously overhangs and would be an issue possibly to Triller, being that they're also a Chinese company and can follow the same kind of issues. In our opinion, we believe that Triller is worth $1 billion. So how do we arrive at that price? We believe it's worthly about $225 per account. Also has Triller TV now as a platform, which allows different kind of subscriptions and has all kinds of different pay-per-view events on it. That's its own thing. It also apparently uses bare knuckle fighting championship.
It says a bit down where it says legal. You talked a little bit about it, that like there might be a ban on TikTok, but it says there that Triller then is preparing to sneak in and take some of the user base for TikTok, and it says the app's growing user base and the fact that it is a US-based company might allow Triller to capitalize on a potential TikTok ban. I think the Triller company is USA, but the AGBA group is Chinese.
Yeah, imagine if the government stepped in and said that everything from TikTok's going to go to Triller and China can't buy it.
Yeah. Yeah, exactly.
Well, there's a lot to get through.
Yeah, I get a little bit of a headache reading all of this, and there's a lot of ifs, right?
There is, but definitely interesting here.
Yeah, if it works out, this will be probably insane.
I will say that the market here, like once I said, so like you and I get the idea here, and this is one thing I like about the charts here. Like if this really breaks out from anywhere, I would argue it's a buy for me because first off, it went from 10 cents to $2 in 4 days or 5 days or whatever the heck it was, which is my kind of swing trade. I don't know if that's not anybody's kind of swing trade, but anyways, so that's super bullish. So I would say if this can actually break out, and I'm talking like a serious breakout, which it looks like it would have to be above $2, or maybe if you consider this a handle here on this recent part, like $1.60, that would definitely probably make me interested enough to try and buy and see what it does from there. But
Yeah.
I mean, you know what I mean? It would be preemptive that you would assume there's some kind of good news coming out, because if it's going to break out, something has to be happening in the background that, you know, people know about, but the rest of us don't.
Yeah. Yeah, and it's also up 3.5% in after hours on Friday. And there's a reverse split also.
And it says yesterday, AGBA advances towards completion of the Triller merger, which makes me think this could really take off. I'll keep a close eye on this one for sure.
Yeah. They have warrants too.
Yeah, I see the warrants. And I mean, a 1-for-4 split, or 4-for-1, that's not all that crazy. Like in this case, I don't think a reverse split is necessarily like a big deal. To be honest, it's not like it's under like it doesn't even necessarily need to reverse split right now. You know, it's got a market cap of 250 million. The share price is over $1. So it's doing that just because it's trying to make it more marketable. A lot of people tend to put cutoffs on stocks. Like, I'll only buy stocks that are above $5 or something like that. You know what I mean?
Yeah.
So I think honestly, this doesn't look to me like a reverse split. That scares me is we're reverse splitting because our share price is 30 cents. You know, that's like, you know, like they're in rough shape. But when it's above $1 and they're going to do a reverse split just to kind of probably capture more attention of people who are looking for a little bit higher stock price. And I know the stock price doesn't matter to a lot of people, and it shouldn't essentially, but it does to some institutional buyers. You know, they kind of put limits on some of the smaller stocks that they'll actually buy. So we'll see. But like you said, up again in after hours too, which means if that holds, that's a 14% move in one day.
Yeah.
And that's after it just came back down from $1.50. And I mean, even if you look at Friday, it traded as high as $1.32. So there's a lot of movement going on there. And that's the first time I've seen this volume all the way since that initial move back in April. You know?
Yeah, I'm checking X and some social stuff about that, and they're talking a lot about that the merger with Triller is gonna go through and stuff like that. So yeah, this will be worth. This, I don't think there's gonna be necessary with so much good news here that this will take off even higher way higher from here.
You said you don't?
Yeah, I think it can. That's.
Oh, so you think it can go higher from here?
Yeah, I think it doesn't take so much news, like positive news
okay.
here.
I was gonna say, I thought you were saying the other way around. And I was like, oh, I actually think that's pretty bullish. I would take that the other way. But okay.
Yeah.
Well, it's good to hear. That's what I was gonna say. If you're the opposite, I was gonna. It's nice to hear you say the opposite, because then I would make me try and dig more in.
No, but I think. See, now we know what Triller is, Dane.
Yeah, right. It's funny. I didn't even hear of it.
But if that scenario plays out like they were describing in the article, this will be huge, of course, and that's what people are seeing here. But we need some news before we can conclude with anything like that. But like you said, if you just follow the chart here, you will probably get some signs, right?
Yeah, like I said, I would think if it's able to break like $1.60, that's a really big point. And then the $2 mark that it had hit way back in the start of May, that would be the next resistance. If it breaks through that, and like I said, if the merger goes through, it's gonna pop. Like it's just all of a sudden AGBA now owns Triller, which is massive for the stock. So I would imagine from there, it's hard to say how high it can go. Like it's not about how high it can go. It's at that point you have to swing trade it and you have to follow some kind of system to make sure you sell as it goes up somewhere, because it could go up a lot quick.
Yeah.
This is the kind of one that if it works out, could be 100% return in like a few days or more.
Yeah, if it works out, yeah. And the volume now is 14 million. Average is 1.2.
Hey, I do got to get going just because I got a lot to do today.
Yeah, that's fine.
So sorry to cut it a little short, guys, but
I think all three that we have looked at looks good in their own way this time, and maybe the most promising one, if things goes the way they want to, is this last one. But I did like the two other ones as well.
yeah, no, they all look decent. I told you, this is when I've been screening this way now, I find so much more interesting companies in my mind.
Yeah.
And I mean, I guarantee you, if I look through these other, 15 names we had up here, they're all interesting in one way or another.
Yeah. I will try to go through them this weekend, some of them at least. And as always, we will post findings on Discord. We haven't done that so much yet, but that doesn't mean that we forget it. It can also be that we didn't like the stuff that we saw, or that we just simply didn't have time to actually go through and sit down. Like for me personally, I've been very busy the last couple of weeks, and also I got sick. So it's just the time, man. It's hard.
It is, and going forward, we're about to have our second. So my time, I might even have to take a break from the stream for a little bit.
Yeah.
Hopefully not too long, but it just depends on what we're doing and trying to get. Either that, or I might do some weird time streams when I can.
Yeah. But that would be all good, and we will notify everyone. And if that is also the case, we have the Discord that we can keep the wheels running a bit, in text form at least.
Yeah.
Yeah.
All right.
All right.
Well, you got anything else you want to cover?
No, just on Thursday I was talking about how close we are now with the Alto Q3 report, and I pulled up a tweet from Justin that he said he will be very disappointed personally if it is only at $3 at the end of the year. So Justin is still bullish.
Yeah, I mean, at this point, I don't think anything's going to change his mind. Like that, something would really have to substantially come out bad that makes him change his mind here. So we'll see.
Yeah, we will see. I'm looking forward to it, and I'm a bit nervous just because of the history from last year and all that stuff. But there's nothing that I can see right now that will damage the results. But we thought the same a year ago, so let's see how it goes.
Yeah, we got to look forward from here, anyways. But and it's still, look, I've been kind of just keeping a track on it, and it's just kind of bouncing around. Yeah.
It does. It was up a little bit this week, but it has pretty much done nothing. But it did take like a 30% up since before Q2. So it has gone a little bit up.
Yeah, no, I mean, it's definitely traded higher. Yeah, and I'm just waiting for it to do something else, because I caught a big chunk of that move. And the second time I caught some of the move, because I bought it like $1.30 something, and I got $1.60, and then same thing this last time, but I got in a little late, so I didn't get much on that one. but still, just watch it alongside, just seeing what happens.
We are getting real close. I think 4 of November is the date.
Yeah, we'll see if we can break that price like $1.80-ish.
Yeah. And it seems like 160 is like a little bit of resistance now a new floor.
Yeah, it's definitely trending sideways right now.
Yeah. So, yeah. Everyone who has followed the stream for a little bit now knows where we stand on Alto.
Sure.
Yeah.
All right.
All right. Are you on Tuesday?
I should be.
Yeah.
Let me just think. Yeah, I assume I will be. Otherwise, I'll post if not. But I don't think I have anything going on Tuesday.
Sounds good.
All
Enjoy
right.
the rest of the weekend, everyone. Then, and thanks for tuning in. And we will see you, Dayne, on Tuesday.
All right. See you.
See ya.